Hi everyone, my name is Tommi Uitto. I have been leading the product part of Nokia's mobile networks for the past 2 years. In this presentation I will introduce mobile networks, describe the starting point in the beginning of 2019 and the foundation we have laid with the product and R&D turnaround in 2019 and 20. I will describe our addressable market and its interesting dynamics, our vision for technology leadership and improved value creation, translating that to financials with focus on operating margin, then show you that we have what it takes to succeed and win, and finally the timeline of how we will make it happen. Let me first introduce who we are in mobile networks. Mobile Networks is a wireless leader and trusted partner for critical networks, both for operators or CSPs like we call them, and increasingly for enterprise customers, especially industry verticals. As many as 29 of the 30 largest mobile operator groups and operators run Nokia base stations. From the start of the year, we brought together the wireless networks and services under one roof in this business group to better align with the way how our customers buy. The annual revenue for our scope of the business was some 10 billion euros last year. We have approximately 18,000 R&D engineers in mobile networks. In 4G and 5G radio access networks, or RAN, we are number 2 in the market, excluding mainland China. We have 196 commercial 5G agreements, of which 146 are supply agreements for wide-scale deployments. 55 of those networks are live today. We also have a smaller but nicely profitable microwave radio business. Let me then move on to talk about our turnaround program. In the beginning of 2019, we started implementing a 2-year turnaround program, including 70 major changes in 5 main domains to improve the competitiveness of our R&D and 5G products. First, I wanted to ensure we had the right leaders with the required leadership skills to lead the turnaround and the technical skills to get our product development methods to a new level. This meant renewing the leadership team, but also consolidating R&D to fewer units and sites, and very importantly, growing 5G R&D significantly. As a result, we have grown our 5G R&D headcount by 40% over the past 2 years. Within this 40%, we grew system on chip or SoC development by even 200% or tripled it, and we grew headcount in some software areas by much more than 100%. Second, together with Nokia Bell Labs, we increased significantly 3GPP wireless research, connected our research teams with product management, and implemented a gated and data-driven product decision process. One example of the success is our number 1 position in granted 5G standard essential patents or SEPs, as reconfirmed by an independent study by IPlytics just 1 month ago. Third, we improved the product development processes, methods and tools. Our 5G R&D has been transforming from waterfall mode of operation to large-scale agile incremental development. This increased speed and improved productivity and quality. One example of the success is that software feature output has increased by some 60%, so more than the headcount increase, as productivity improved. At the same time, R&D became more predictable. The so-called feature build accuracy increased from 60% to 90%. Fourth, we renewed the processor base and re-architected monolithic software in some areas to make it modular. Nokia had to introduce our first 5G products with FPGA technology for 5G baseband and massive MIMO. We diversified our SoC partner base from 1 to 3, and as said, we tripled our workforce developing SoCs. We now have ReefShark SoCs for all 5G base station functions, and we are integrating SoC-based products to complete the portfolio. The share of SoC-based 5G products has grown from basically nothing to over 40%, and we will be at some 70% by the end of this year, growing to 100% in 2022. Fifth, we evolved the culture towards a high-performance culture and a learning organization. We conducted hundreds of so-called autopsies without blame to make systemic improvements. Based on Accenture Transformation Map, some 75% of our team scored higher than the average of more than 200 benchmark companies. As a result of this turnaround, we have seen the 5G roadmap gap to our key competition narrow significantly. We have gotten complimentary feedback from our key customers, such as Vodafone and Vodafone CTO Johan Wiberg, about the turnaround and having narrowed the gap to competition. Since the full benefit of these changes will show in the products that come to market this year and thereafter, as there is basically an 18 months lead time in SoCs or ASICs, we expect to close the gap in those areas where we have been behind during this year. I am extremely proud about how far we have come. This is an important foundation for the next steps in our journey. I will share with you later in this presentation how we in Mobile Networks will benefit from the new operating model that Pekka Lundmark and Marco Virén helped us design and implement, as well as from the further increased 5G R&D capacity. Let's then take a look at the market where we operate. In this graph you can see the RAN market of products and attached services and the composition of the market. Let me explain what is happening in this market. In short, 5G technology and enterprise segment are driving growth in mobile networks. For one, in the somewhat flattish CSP market using actual FX rates against euro, 5G is growing and replacing volumes of previous generations. Second, trust and security are increasing in importance, and this has opened up interesting opportunities for us. Third, the enterprise use cases are driving growth beyond basic voice connectivity and mobile broadband. Industry verticals are automating their business processes using either CSP's commercial networks, logical slices of those networks, private wireless networks, or a combination of these. Fourth, there is gradual adoption and drive towards Open RAN and virtualized RAN. More on this topic later. One important thing to note is that we are still in the early phase of the 5G cycle. Another important thing to note is that we expect the peak of the 5G cycle to be extended and longer than it was in 4G. The reason for this is that the first phase of 5G is mostly about mobile broadband, but the second overlapping phase comes with great Internet of Things capabilities with ultra reliability, low latency, and extreme IoT connectivity. Over the next 10 years, industry verticals will learn how to exploit wireless networks and IoT to automate their business processes. We expect our market share in 4G, 5G to be between 25 and 27% this year, excluding mainland China. This exclusion said, China is a big market and there are important innovations there, so we are keeping a close eye on how we could increase our 5G share in that market. Overall, our addressable RAN market is expected to grow by 1% through 2023 or by 2% at constant currency, but within this market, private wireless networks market is expected to grow at a CAGR of 35%. This is an important point. We have done remarkably well in 5G and RAN business overall, despite of the early difficulties in 5G. Our success rate in converting our own 4G customers to 5G, considering also customers and share that we have won from competitors or share lost to competitors, is approximately 90%, excluding mainland China. It was even more than 100% before we suffered from specific headwinds in North America. Over the course of the last 2 years, we have won 22 completely new customers in RAN. Further, we have grown our RAN share in 20 such incumbent accounts where we were already present, but we took share from competition. Of the total value that operators moved from some suppliers since 2019, we have won approximately 50%. This will help offset the headwind we suffered in mainland China and North America. It also tells you about the momentum with our improving 5G and resilience of the business. There are still further opportunities to win completely new RAN customers in transition from 4G to 5G and to grow our share in run rate accounts. The size of such opportunity could be up to the same size as the cases that were decided in 2019 and 20. Let's then move on to the segment of enterprise and especially private wireless networks. We are already the leader in this segment, which is growing at 35% CAGR. Like I said, asset-heavy industries and industry verticals are starting to make use of wireless technology and Internet of Things to automate their business processes. Our Bell Labs colleagues say that most industries have been able to improve their productivity thanks to computers and digitalization by an average of up to 3% per year over the past decades. But the so-called physical industries where something is moving, changing form, or needs to be controlled, have lagged behind with less than 1% productivity growth CAGR. The reason is that there was no proper technology to connect objects in a wireless and reliable manner. 5G is totally changing this. To date, we have sold already networks to more than 260 private wireless customers through CSPs or directly, and more than 30 of these are 5G. Industry analyst firms such as Omdia and Analysys Mason have confirmed Nokia to be the clear leader in private wireless. My business group of mobile networks makes the RAN part, the wireless part for these private wireless networks that are solutioned and sold by our Cloud and Network Services business group, led by my colleague Raghav Sagal. In our go-to-market approach, our priority is SPAP, Service Provider as a Partner, where we help our customers build these private wireless networks for their enterprise customers. But if our CSP partners are not interested, then of course we will sell direct. One of the interesting dynamics in our addressable market is the evolution and adoption of so-called Open RAN or O-RAN and virtualized RAN, making use of cloud computing in RAN. O-RAN is about opening base station interfaces to drive innovation and scale, among other things, and vRAN is about bringing the benefits of cloud computing to the baseband processing of base stations. We are fully committed to O-RAN. Nokia was the only large established supplier who endorsed and helped foundation of Open RAN Alliance when it was only 5 operators. Today, there are 27 large operators in O-RAN Alliance, and 23 of them, all but 4, are my RAN customers. Therefore, this is a highly strategic topic for us. We have been a key contributor to the O-RAN standard and specifications. It was Nokia who contributed the specification of the so-called open eCPRI interface between radio and baseband. You see, we rather create the future than to try and hang on to the past. We believe it's better to be part of shaping the future and be part of it than fight against it. By being a leader in O-RAN and vRAN, we can make sure that our SoCs and our platforms are compatible with O-RAN and vRAN. We believe that by being leaders in O-RAN and vRAN, endorsing them and defining them when some of our competition is not, we can win more share and margin than we would lose simply by opening base station interfaces. With our new product platforms, we are ready to face any competition from the new entrants, and we can take share from those who refuse or hesitate to comply with O-RAN and vRAN. There are certain technical and operational challenges to be sorted out in O-RAN and vRAN. The technologies are not yet fully mature or cost competitive, but engineers are smart, and we will be able to overcome those challenges. Like I said, it's better to be part of solving those problems than be on the fence. What is interesting is that many of the industry verticals are particularly interested in cloud computing in general. We are experimenting with web scalers to see how to make our RAN software run in their public service clouds for vRAN. This all ties back to our strategy in the enterprise segment. What is also interesting is the value shift. Value will shift from baseband hardware to software, and with massive MIMO from baseband to even radio, with more and more software content in radio. In fact, in vRAN, we may not even sell any baseband hardware, and our business becomes pure software. And even if radio cannot be virtualized, after all it's radio, with sophisticated beamforming, it will become more software-centric. As you may know, Deutsche Telekom in Europe was not satisfied with our single RAN and 5G radio technology in 2018 and before that. Nevertheless, what we and DT agreed to do in early 2019 when I started was that we would keep DT updated on our progress in product and R&D turnaround. They have been pleased with our approach and the progress, like Vodafone has. For one, DT has recently chosen our mainstream 5G RAN for one of their large European affiliates. Not only that, but we grew our share from 4G to 5G there. Second, DT announced in December that it has chosen Nokia in so-called O-RAN Town pilot network in Neubrandenburg in Germany. These are good examples of our progress in 5G overall, but also in O-RAN. So where do we go from here? What is our vision on achieving technology leadership and improving value creation? Here it is. We will become the leading and trusted secure partner for 5G wireless networks for both CSPs and enterprise alike. There are 4 strategic focus areas here: maintaining and winning scale, further improving our product competitiveness, shaping the market and defining our own future, and resetting the fixed cost base to fund 5G R&D, O-RAN, vRAN, and better profits. This is how it works. We will continue converting our 4G CSP customers to 5G, because some of our 4G customers have not yet made their first 5G deals. We will continue winning new CSP customers, just like we have done in the past 2 years. We will continue to lead the market in enterprise segment with private wireless networks and win many more deals in this segment. This requires that we further improve competitiveness of our 5G product, specifically in the CSP space. We will build on the R&D and product platform turnaround that we implemented in the past 2 years. We will further increase our 5G R&D to finalize the catch-up job and put this 5G roadmap topic to bed for good. And we will continue to reduce product cost and services cost. And more than that, we will be shaping the industry, shaping the market, creating the future. We already lead in solutions for enterprise segments, such as the private wireless networks or in end-to-end 4G, 5G network slicing across radio, transport, and core. We will keep this lead. We will make O-RAN a commercial reality to gain share and margin. We will bring the benefits of cloud computing to RAN. In order to fund the increased R&D spend and improve operating profit, we will reset the fixed cost base enabled by our new operating model. This will take us from this year's break-even result to 5 to 8% operating margin in 2023. Beyond that, we will have the ability to get to 10% or more. Let's then look at how this translates to the financials and our operating margin in more detail. Let me take you through this bridge chart showing the evolution of our operating margin from 2019 to 2023 and onwards. Starting from the left, with the current scope of mobile networks, Nokia made a 2% operating margin back in 2019. But then, thanks to the R&D and product platform turnaround, we were able to improve the profitability of the product business significantly in 2020. In our services business, we cleaned up or exited low-margin deployment business. As a result, the comparable operating margin improved to approximately 8%. Unfortunately, we suffered from some specific headwind in the US in the second half of 2020, taking us back in 2021. To a lesser extent, there's also impact from China, where our 4G volumes are going down, but are not replaced with the same amount of 5G business. And as we have said, we are increasing our 5G R&D spend to secure the full competitiveness in the CSP space. Like Pekka Lundmark has said, we will invest whatever it takes. And of course, in the private wireless segment, we already are the leader. This is the year when we get the first impacts of resetting the fixed cost base in reducing all but 5G R&D cost. We are specifically streamlining our OPEX and fixed production overhead cost through restructuring. This will take us to approximately break-even result this year, from -1% to +2%. Going forward, we will tap to the growing 5G market, the enterprise market, to grow our volumes. We continue converting our 4G customers to 5G, winning new CSP customers, growing share in run rate CSP accounts, winning in private wireless, and leveraging our O-RAN vRAN traction to take share. One thing to note is that initially the cases that we won from competitors have a lesser margin profile due to the swaps, but they will recover in margins when the swap phase is over. We will continue to improve gross margins with new SoCs, with the new product platforms, and further digitalization of service delivery. And we will get the full benefit of resetting the fixed cost base. By doing this, we will get to 5 to 8% operating margin. And in the longer term, we will be in the position to make 10% or better operating margin. We have what it takes to succeed and win in this market. Let's take a look at a couple of examples of these critical success factors. We have the first generation ReefSharks now for all base station computing functions, both in baseband and radio, including massive MIMO. The share of ReefShark-based products is increasing constantly, so that at the end of this year, only some configurations will still rely fully on FPGA as opposed to SoC. We will be making more product launches for the new platforms in due course, so stay tuned. In 2022, we will be done with the transition. And note that we have already the next generation SoCs in the works. What's particularly interesting with this is that when our competition has just launched their new silicon and their new platforms, we are already working on the next SoC technology, again packing higher packing density and capacity in silicon. So there's a cadence in introducing these platforms. Services have a key role in improving the competitiveness of our products and overall profitability of the business. With our integrated operating model for mobile networks, products, and attached services, we can now better consider services requirements in product development, helping to reduce cost and optimize the total cost of ownership. We are progressing well with digitalization the service delivery. This means automation, remotization, and digital end-to-end services delivery orchestration. All of our 5G deployments are already digitalized. We have exciting new use cases with digitalization benefiting from AI, ML, chatbots, and zero-touch approaches. Independent industry analyst firms like TBR say that Nokia is leading the charge in digitalizing deployment services. And thanks to this, we can see a 35% reduction in the end-to-end deployment time and up to 30% reduction in case handling time in technical support. One of the crown jewels in my business is that I have the team that can make the best performing wireless networks in the market. In this graph you can see the crowdsourced daily 4G network performance data from 36 representative countries around the world from 226 large cities from December 2020 to February 21. It shows that on average, Nokia supplied networks deliver higher downlink speed from network to device, higher uplink speed from device to network, and shorter latencies from device to network and back. This data comes from Tudela, who gets network performance KPIs in the background from many popular apps in iOS and Android devices. There are tens, hundreds of millions of data points. Here, it is not possible to identify test drivers and allocate all network resources to those testers because almost everyone is a test driver. Moreover, the traffic profile here is real, unlike in many of the tests using large file downloads. And due to the very large sample size from so many networks in so many countries and cities, the data is representative of our capabilities. Why is this so relevant? It's because I have now moved the people who made this great 4G product to lead our 5G development. This team has what it takes to win in this market. This operation just had to be organized and led better. So let's look at how we're doing in 5G. We had a difficult start in 5G. When we launched the first 5G networks in the world on April the 3rd in 2019 in South Korea, frankly, we were not as competitive as we would have wanted to be. But look at where we are today. This graph is from one of the networks in South Korea, from a network with 3 RAN suppliers. It shows the daily average downlink speed from January 21 to February 21, so very recent data, in this 5G dual connectivity network. It shows that our dual connectivity performance is already on par with competition. This data is also from Tudela. It is crowdsourced, it is reliable and representative, and this is the real user experience because this is how basically all 5G networks are built today, dual connectivity, and because this is the real traffic profile. Of course, we do continue to work relentlessly to improve in any 5G performance characteristic where we may still be behind, and we expect to close whatever such gap during this year. Let me then share with you how we will benefit from the new operating model that Pekka Lundmark and Marco Wirén helped us design and implement. The new operating model is enabling us to reset the fixed cost base while maintaining full focus on customers, products, and R&D. We will manage P&L in just one dimension, in the business group dimension, no more matrix. We are fully accountable for the P&L of our business group, meaning that I'm also accountable for the support function costs in my business with full authority. We are now also managing the P&L of product plus attached services as one business, optimizing the whole rather than optimizing separately product and services business, which are essentially just one business. This operating model makes it a lot easier to run strong financial performance management thanks to clear accountabilities and responsibilities. And in the new setup, we will continue to nurture and evolve our culture with a focus on learning, commitment, collaboration, and trust. I will conclude my part by describing the timeline of our turnaround and how it relates to the overall Nokia plan. This year, 2021, is all about the reset. We will finalize the renewal of most of our RAN product portfolio. We will continue our strong momentum with CSPs and enterprise segment. We will make the first fully O-RAN compatible deliveries and deliver fully virtualized vRAN with hardware acceleration. We will reset our fixed cost base to fund 5G R&D increase and to preserve profits. In 2021, we expect to make between -1% and +2% operating margin. The next 2 years are about acceleration. Once we have caught up in whatever remaining aspects of 5G, we will go for leadership in 5G just like we lead in 4G performance. We will convert this portfolio competitiveness to further sales and margin with new CSP customers, new enterprise customers, and better margin in the run rate business. We will capitalize on early O-RAN and vRAN market making, and we will get the full benefit of the fixed cost reset. These actions will help us improve operating margin to 5 to 8% in 2023. And then, as of 2024, we will be completing 5G coverage build-outs, densifying networks with small cells and millimeter wave hotspots. We will be driving further 5G growth with new use cases for private wireless networks amongst the industry verticals with new IoT capabilities. We will be refarming more and more operator spectrum to 5G and profiting from our leadership in carrier-grade, high-performance O-RAN and cost-efficient vRAN. And then we start preparing for 6G. In the longer term, we will be in the position to make 10% or more operating margin. That's what one can and shall make in this business. And that's exactly what I and my team are determined to do. Thank you very much for listening.